Olivia, let's just set the tone. What's going on in the credit markets?
There's been a lot of weakness in the credit markets, and there will remain to be a lot of weakness in the credit markets. What we've been dealing with is rising interest rates, and companies are no longer able to borrow money as cheap as they have in the past years, as little as a year ago. And so that's causing some disruptions as those interest rate changes start to really move through the market.
Right. Well, but then the big question is, some of these companies are going to have to raise money at some point,
yes.
right? So is there some sort of cliff that we need to be keeping an eye on with regards to the refinancing and with regards to some of these rollovers and companies that may not necessarily find favorable rates?
2024
like
is really
the cruise industry, perhaps?
Yes. The cruise industry is actually a really interesting one. I'm working on a separate story about that. But I think it's really important to sort of note that these companies do have some options. A lot of what we've been seeing in the loan market is these amend and extend transactions where companies are pushing out the maturity on their debt. They're paying a little bit more for that, but they're not having to come back and get new capital.
Yeah.
And I think that's what's been,
Yeah, I'm sorry. Can we show, I don't know, for our television audience, can we show this chart here? Because in your story, you had something with the most distress, the industries with the most distressed
yes.
debt, if I get this right. I think real estate was by
yes.
far the rest, and that's understandable here. But then I look at some of the other names. It was software and services looked like it was sort of next, and then a lot of the retail and discretionary names. Why software? What's happening there? Because I thought most of those companies weren't as indebted as some of the other non-tech companies were.
Yeah, the software services industry has been a little bit of a weak point this year. They have been lagging in returns compared to other sectors. And there are some just weaknesses in terms of demand, especially ones that really thrived during the pandemic and had more of like a stay-at-home focused audience. That's sort of changing now.
Oh, yeah. So this is like, Tim, you cut your Adobe subscription?
Yeah, exactly. I guess my question has to do with interest rates not going down anytime soon. So, Olivia, if that ends up not happening, the Fed continues to tighten, and in fact, we get to a terminal rate of above 5%, and we hold it there for quite a while to bring inflation under control. What does that mean for
I was
credit?
told there was a Fed pivot coming.
Yeah, some people think that, Romaine.
No, we heard earlier that it's not going to come for a while. Anyway, go ahead.
No, I think that's like the really big question.
We asked the questions and we let you talk.
Yeah.
But you do think about, like, I feel like when money was so cheap, we lauded companies for redoing their debt and at lower rates. Now, and they've loaded up, right, just in case. And now it's a problem, potentially.
Yeah,
for
so
some industries.
What's going to happen over the next few years is that more and more companies are going to need to refinance. I think that issue is really going to come to a head closer to 25, 26. But what you need to remember also is that companies are coming to the bond markets in advance to finance maturities out even 5 years in advance. So we're going to be seeing next year some of that strain. Maybe there isn't actually a maturity coming due for a company, but it has a maturity coming due in the next couple of years.
Right.
And it needs to get that funding secured soon.
Right.
Can I just squeeze in one other question, though? Because there's been a lot of speculation that there's going to be sort of this onslaught of new issuance, particularly among the higher grade borrowers in 2023, once you get a little bit more clarity. Are you buying into that? Is that what your sources are telling you?
I do think what my sources are expecting is for us to see a pickup of issuance at the beginning of the year, because what the market is expecting is for spreads to widen. And what they want to do, these companies are going to get in January while they can, after a year that was difficult to come at all.